Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping back down into the world of Bitcoin, taking a look at what's been going on most recently, what we think is going to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will stay up to date with all the videos that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. If you are looking for a little bit more from the crypto space, why not check out the Patreon service? We actually offer a lot more for our Patreon members via Discord. Everything from kind of trading through to project reviews, AMAs twice weekly, what the buy, sell, and staking things that me and Chris are up to, a whole host of additional benefits. Why not check those out if that's something that you're interested in? Let's get started though, right? So Bitcoin paired up with USDT. On this 1 hourly chart, Binance is the data source. Now, here we actually have, kind of following on from yesterday's video, completed our fifth wave lower. Okay, now it's possible that this is not quite finished yet. I don't like the structure of the fifth wave personally, but for the most part, it's met exactly what we were talking about yesterday, right? It came exactly down to the 1.618 fib level. So we'll show you that first, right? So what I'll do is I'm going to zoom in, and I'm just going to make this a little bit here, just a little bit bigger. You can see the wick in question is basically this one right here, and I'll grab my fib. What I'm going to do is I'm going to run a fib from this low point just here to this high point here. We're going to move the Fibonacci retracement tool over. Actually, no, I don't need to move it at all. I can leave it right there. And what we can do is we can assess that actually our 1.618 was 18,973, and we came down to this area just over here, which if I hover on this wick in the top left-hand corner, we can see we came down to 18,975. So we fell into completing the fifth wave according to the rules of Elliott wave theory, but I don't like the structure, okay? The structure isn't exactly the best. I'm not fond of it, and that leads me to think one of two things. One, it simply is just a really bad structured fifth wave, or two, we're actually doing an ending diagonal and this fifth wave is not finished yet. Okay, so that's kind of the two things that could be going on here, and we should kind of, hedge our bets and think about what's going on if those two things could play out. Okay, so just bear those things in mind. Now, obviously, I haven't adjusted this since yesterday. So we did the stream this morning. I did adjust a couple of, I actually didn't adjust anything. I just kind of added a few things on here. But for the most part, we've got our resistance line here. This has always been on the chart. You can check yesterday's video, and you can see that this is an area that we're coming up to, right? So we've referred to these things as support or resistance. You can think of this as support and this is resistance. Or we could actually think of these as what they actually are, which is supply and demand. So our demand lines are down here at the bottom and our supply lines are up here. And essentially what this means is it's a battle between supply and demand. If you've got a lot of supply entering in the market and that's happening up here, this will be resistance and the price will push down. And likewise, if there's a lot of demand where people have their buy orders all stacked up down here, then that's going to be where the price will push back up. Okay, so we actually kind of found ourselves over this weekend wedged in between these two levels. Okay, so it's not unusual to kind of see these things, specifically over weekends when the volumes are low. And right now, one of the biggest concerns I have is the sentiment. Okay, we were talking about this on the stream this morning. You can go ahead and check out that. I'll put a link in the description below for the Twitch stream that we did, where we're talking about the sentiment being more bearish. They've got a lot more short positions entering in the market. Now, those short positions are assuming that the price is going to come back down into the demand zone, right? That's one of the possibilities. However, when you put a short in, there's also buy orders that are stacked up higher. Okay, and the problem with this is that if the price moves up, that starts to compound down, and basically those buy orders start getting hit, and that also fuels the price movement to the upside, liquidating as many people as possible, right? So what you tend to find is that when people go short, the price gravitates upwards and the price pushes upwards, and a lot of people get liquidated out of the market. Okay, so right now the sentiment is that the price is going to go down, and it's such a majority swing that the people think that the price is going down that I think that actually the opposite is going to happen. Okay, so we're just going to keep those things in mind. At the moment, we're up against the resistance in this supply area, but if we were to break this, and we're going to probably be pushing up quite a bit. Now, let's move on to the obvious big yellow box up here. Following on from yesterday, the targets haven't changed. 19,000 19,457 through to 19,833. That is the bigger three-wave structure that should follow after this five-wave drop. Okay, so if we have finished this fifth wave down here on that perfect 1.618, then essentially we'll be moving up into this area under a three-wave structure. This is just a typical movement, okay? This is not a guarantee. This is just an area that you typically would expect a wave 2 to land, okay? Anywhere between 50 and 88.2% retracement of that entire five-wave structure. Okay, so that's kind of where it puts it, 19,457 through to 19,833. Once complete and under, it should be a three-wave structure as well, guys. We don't see five waves and five waves next to each other. You would be looking for a three-wave structure. So we're looking for three waves up, after which we then move down, and we'll talk about where that can go in a moment. Okay, so what we're looking for is if this has come in here, we could be looking at this as our A wave. Okay, so I'll wrap this in, right? And this is basically just A. We then retrace into B, and then we move up into C. Now this will be 3, 3, and could be 5, it could be 3 at the end. We don't know, but 3 waves up in A, 3 waves down in B, and then either 3 or 5 waves up in C. Okay, and you can see how that would take us into that range. So essentially, that's kind of where my thoughts are. Now, that's under the assumption that we finish this wave 5. If we haven't, then we're probably going to come into this demand zone again. We don't have to come down massively low, though. This would be basically looking for a fifth wave movement. So we'd look at it like this. It would be a 1, 2, kind of 3, 4, and finally 5, and we're allowed to overlap 1 and 4 only under these diagonal structures. Okay, now wave 3 cannot be the shortest wave. That's the only real hard and fast rule with these. So we'll keep it in mind. That's also a possibility that we do visit this area, and those short positions are right, and you know the price has to come back down here. I'm not confident on that, but it's a possibility that we should acknowledge. Okay, let's zoom out just a fraction and talk about what's going on here. If we do go up into this area, and the fact that we've got 5 waves, we'll be looking for a minimum of a 535, and that would come down towards this $18,471 line. Okay, it would be a basic big ABC, A, B, and C like this, right? And we'd be done, right? We wouldn't have to worry about anything more. However, if we do move down more rapidly, when we actually talk about this being a 5-wave structure on a bigger scale, that would actually tie up really nicely with this 5-wave structure on this side. Okay, and that would be a big zigzag in that kind of regard, right? And we can see here 5 down, 3 up, 5 down. Right? And although that B wave in the movement in the middle there is very, very hard to actually place what it is, it could be 5 waves, and we could just be zigzagging down and looking for another 5 waves up afterwards to complete a much bigger ABC structure. But we're getting into complicated territory when we start talking about that. So I'm going to park that until those kind of scenarios actually crop up as more probable. Okay, so for now, it's looking like this. Now, if I zoom out even further, one of the bigger concerns that we probably have here is that actually this could potentially be a much bigger 53535, taking us down into these newer lower lows. And obviously, you know, that would mean, you know, 16, maybe even $15,000. Now, this would be considered a big 3 waves down, 3 waves up, and 5 waves down. The 5 waves down, obviously, this being a wave 1 scenario here. This movement up is a wave 2. We'd have to come down very significantly into a wave 3, 4, and 5. So you can see how this breakdown here would have to be really, really severe. So this is a possibility, but it's a bit of a wild card at the moment. Okay, so we just want to kind of keep those things in the back of our heads as we think about structures and, you know, the actual structure of the chart itself, right? And whether or not we think we're going to have a break of that structure at any point in time. Okay, but for now, let's kind of focus in the potential 5-wave drop coming, with a wave 2 coming up here. Okay, so we'll look at it as a zigzag for now, and we'll analyze whether or not we have bigger problems that will come at a later stage. Okay, so for now, that's kind of where I place Bitcoin. From our stochastic RSI point of view, if we actually were to focus in on what's kind of going on right here and now. Now, I've made some changes to the Cheeky Crypto stochastic RSI. So this one here is our own indicator. This is Cheeky Crypto SRSI. And what this does is it basically plots the stochastic RSI on here. And it also gives us the multi-time frame overbought, oversold indicator on the right-hand side. Okay, so what this allows us to do is look at multiple different time frames without leaving this chart and saying, okay, the 60-minute is overbought, but the 240-minute or the 4-hour chart is oversold. The 8-hour chart, daily, weekly, is not got anything overbought or oversold, and the monthly is oversold. This gives us a bit of a snapshot just by taking a look at our current position as to whether or not we should be concerned, right? Now, with this particular indicator, we've got added a couple of additional things in here. Okay, so under styling, we can change the colors of the lines and the kind of usual RSI stuff. We don't have to worry too much about that. And when I come in on here on the inputs, we can obviously put all the various different inputs for the stochastic RSI. So the RSI source is open, high, low, close, divide by 4. This gives us the average of every candle rather than the default. By default, everything is on close, and the close position does change our analysis ever so slightly, okay? So we want to bear that in mind. Now, if I put this back to, and if you pay attention to the indicator on the right-hand side there, if I put this to 𝗕𝗪𝗔𝗠𝗃, you can see how things change up quite a bit on that chart, right? So just understand that we're taking an average. When I do my charts, I'm using this one, but by default, the stochastic RSI will look like this, okay? These give you slightly different analysis periods, right? So just bear in mind that, you know, you get the ability to do whatever you're comfortable with this indicator. But for me personally, I like to keep it on the average of each candle, and then I run that across the length of 14 and smooth everything out by 3 and all the usual kind of stuff that you get with the stochastic. And now this indicator is not something that you're going to be able to find through the indicator tab. This is something that you have to get through our Patreon services. It's an invite only. So if you're a Patreon member, a YouTube member, a Twitch subscriber, then you're going to be able to find this indicator in our Discord server. Okay, so if you just mention me, I can link you into it, but it is also pinned in the member chat area. So you can get hold of it and add it to your favorites, add it to your charts, and use it. What I've done is I've added the stochastic RSI and this together as one indicator, which means you can save time. You don't need to have the higher level tiers that give you all these indicators on your TradingView accounts. And if you are looking for a TradingView account, links in the description below. It really does help the channel out. Okay, so that's kind of what's going on with the stochastic RSI. We can see that we're overbought according to my stochastic RSI indicator, and we're looking for retracement. So this supports the idea that there's a move to the downside needed, but the 4 hourly is giving us a slightly different picture. It's all the way down here. We're looking to just cross that signal line soon. And so actually that's given us a real bullish indication that things might actually be breaking out of this resistance area, right? And we're not really seeing any kind of bearish engulfing candles at this point in time. So we'll keep an eye on those. On the 8-hour chart, still need to see a correction, but quite equally, we can move on up from here. This wouldn't be the first time that we pulled back a little bit and then rallied up again on this 8-hour chart. The daily chart was oversold and is now moving back up. So again, an indication that wave 2 could just be around the corner here. So again, like I said, that sentiment being bearish right now and loads of short positions opening up, liquidity is up here, and that is really attractive to the institutionals, the market makers, and the whale players, right? So looking at this, I would think that actually the more probable move based on the data would be that actually would move on up. But I could be wrong. We could still have that diagonal structure. Like I said, it's one of those that's quite a difficult time to read, specifically with low volumes over the weekend. Throwing in the liquidity indicator helps us layer in a few additionals, right? We can see here we have a fair amount of liquidity stacking up in terms of those leverage positions, and there is a small amount down here. We could come down, grab this maybe, but there isn't terribly too much. There's definitely a lot more up here, and that's obviously apparent from the shorting that's been going on in the market. So my expectations are we push up rather than pushing down. That seems to be the most logical, that the way the areas are going to go. Now down here we obviously have this liquidity. I think this comes in later, so we'll grab this later. And on the upper side, it's far too high. I don't think we're going to be moving up there into the sell order blocks there. Now if I come to the daily though, the big one is all the way down here at 15k, and if we shoot on up here, we've actually got this at 50k on the sell order block. So for the most part, this is where I'm thinking the price is actually gravitating to over a period of time, 15k. So we'll keep an eye on that on Bitcoin, but for the most part, that's kind of where things are placed. And if you want to learn a little bit more, do join us on the Twitch streams. I know it's not necessarily the most favorite platform for many, but it is. It's definitely got better quality visuals and audio, and they are trying their best to build out a crypto community on Twitch. And I think driving further adoption of the crypto space across multiple different platforms is a must if we want to see this industry grow to where we want it to. So do support us over in Twitch if that's of interest to you. We do cover a lot more there. We do an hour-and-a-half long streams pretty much every day on Twitch, kind of covering what's going on with the on-chain metrics, the whale wallets, and all that kind of usual stuff, and of course the price action of the charts as well. So guys, I'm going to leave this video right there. If you found it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, hope everyone has a fantastic weekend, and I'll catch you in the next one.